Hello and welcome back. Hope you're good, doing well, having fun over the weekend and getting ready for next week. Okay, so let's look at the website. If anyone want to join us looking for membership, just simply go for wave-trader.com and join. And if you're looking for further information, just simply fill that form and send that form to me for further information. All right. So now let's move on. Let's look at the setups for next week. So first of all, as you guys know that inflation data was really, hot last week. Inflation in the US is at 7.50 and the Fed fund rate is at really is at the bottom, we can say that, is at the zero. So if I'm going to look at the inflation quickly, so there you got. So there is the rate of inflation in the US. Okay, so it is at the 7.48. Okay, so it's really hot, we can say that. So if I'm gonna pull out Fed funds rate on it, okay, so Fed fund rate is sitting at 0. Okay, and if I'm gonna pull out US 2-year yield, and US 2-year yield is running at this is not the updated one. Okay, so the updated one is going to be the updated US 2-year yield is at 1.50. Okay, so it closed at 1.50. There we can see. Okay, you can see that on my watch list. And if I'm gonna, there you see. All right, so the real one is at 1.50. There we can see. All right, so 1.50 US 2-year yield. So what these charts are telling us these charts are telling us that Fed is going to raise the interest rate. All right, that's the fact. No, all right. So they cannot keep their Fed fund rates close to 0 while inflation is sitting at 7.50. Okay, that's a fact. They have to raise the interest rate. They have to change their monetary policy to bring the inflation down. Okay, that's the fact. Okay, and US 2-year yield is clearly telling us that what is going to happen. Okay, so right now market is simply pricing in for 50 basis point hike in March. All right, and market is already pricing in for that. Okay, so market is expecting that Fed is going to raise the interest rate with 50 basis point in March. Okay, that's the reason US 2-year yield is just simply spiking up aggressively and is sitting at 1.50 right now. Okay, and what I'm anticipating that Fed is not going to raise the interest rate with 50 basis point. They're gonna start with the 25 basis point. All right, and there is very less likely that they're gonna raise the interest rate with 50 basis point. Okay, that's going to be too hawkish for the market, and market may not handle that 50 basis point hike. Okay, and as I have said a couple of times in my previous weekly market outlook, that if Fed is going to be too hawkish, okay, then we may see inversion in the 10-year and 2-year yields. Okay, so those yields can invert. They are already flat, already getting flat day by day, and if we see inversion in them, then highly likely we're going to see recession in 2023. Okay, so market is simply setting up for that. So if I'm gonna go back and gonna look at the yield curve. So yield curve. All right, so then you guys gonna get the idea that what to look for, what are the opportunities. Okay, so if I'm gonna look at the the 10 over 5, okay, so 10-year over 5, so that is just 7 basis point away, seven basis point away from from the bottom. Okay, so recently when we hit the recession in March 2020, okay, so yield inverted over there at this area. So if I'm gonna look at the monthly chart, so every time when yield inverted, market went for the recession. Okay, there you can see these are the bottoms over there on this. So this is the first, which is this is the first. Okay, so 10 over 5, which is just crashing back to the bottom sharply, okay, as compared to the others. So if I'm gonna look at the others, okay, so 5 over 2 is also heading back to the bottom. Yeah, previously, if you guys remember or not, so I was expecting that to go up to 20 October, all right, so 20 October lows. So it is also about to hit that 20 October low, so 5 over 2. All right, and if I'm gonna look at the 10 over 2, which is more important than the others, okay, so 10 over 2 is also heading back to the bottom very, very aggressively. Okay, there we can see. So it is, still far away from the floor. It's, 41 basis point away from the floor, but the lower it goes, it's, it's just sending us a signal that markets are not feeling really well for this hiking cycle. Okay, so if I'm gonna look at the 30 over 2 is also going down, but it's 74 basis point away from the floor. Okay, what these curves are telling us, these curves are telling us that people selling short-term bonds, all right, they are selling equities, risk on assets, and they are going into the longer-term bonds. They are buying the longer-term bonds, all right. And why they're buying the longer-term bonds? Because they believe that right now yield is sitting, inflation is sitting at 50 or 48, all right, percent. That's not going to sustain, all right, that may drop sharply. We may see crash in the inflation, all right. Inflation can crash aggressively to the downside. So if inflation is not going to crash, okay, and going to keep pushing more higher, okay, then we may see stagflation. Okay, stagflation means that oil needs to keep pushing more higher. Oil needs to stay, energy cost needs to be expensive. Okay, energy prices should not fall. Then we may see stagflation. But right now, market is simply setting up for crash on commodities prices. Okay, we may see crash on commodities prices in the 2022 and in 2023. Okay, so hope that makes sense for you to understand that what's happening. All right, what 2-year yield is telling us that Fed is going to raise the interest rate, okay, and they are going to be really hawkish for the 2022, okay, and that's a simple and easy analysis for the dollar. Okay, so dollar is going to be a bullish story throughout the 2022. Okay, so if I'm going to start from the dollar index, all right, so you are, as said, okay, so the longer term trend is still bullish. Okay, so 2-year, let's look at the previous chart again. Okay, so it's pulling back, and last week we were expecting it to hold the trend and continue to keep rising. So it is simply holding the trend. Okay, and we are looking for this to continue to keep rising for more upside. Okay, and this time we are expecting it to break out and extend that. Okay, so let's look at this impulse. Okay, so you're looking for this to extend up to 127. 127 going to be the next leg. All right, so in best case scenario, as said, you are looking this to go beyond the pandemic top. All right, this price, you are looking this to go for longer term and hit that area, 100 we can say that. So is it ready for the next run? It is almost ready, and just simply bounced up from the previous low as we were expecting it to last week to do. Okay, so what you are expecting this to do next week? Okay, first of all, you are expecting it to the move which we are having right now, this to continue to keep pushing more higher, and tag that. All right, and correct slightly, okay, and tag that 70%. Okay, so at that 70% retracement of this bearish wave, we may see another leg lower back to these areas. Okay, and then again it's going to be a buy opportunity. Okay, there is possibility that we may not see this move. Okay, and price going to keep rising for upside for the next bullish run, as we can see that many Fed officials are saying that the March rate hike is a done deal. Okay, so there is possibility that dollar index no gonna drop and gonna keep rising for more upside. So you have to keep close eyes on any correction. So what you are simply looking, okay, so price to correct over there within these areas. Okay, correct over there, and these one are moving averages to hold. The way you have seen breakout over there, you're expecting another correction and breakout and continue. So if it is not going to correct and not going to break out, all right, so let this to fall back for another leg lower back to this previous low. Okay, let that to test these areas. All right, and if it is going to test these areas, then you are looking again a buy opportunity. All right, so good evening everyone. Yeah, thank you. Okay, so it's a simple buy opportunity. So if you don't understand that what's happening over there on your lower time frame, then simply, as said in the previous weekly market outlook, keep eyes at these areas. Okay, so this SMA, so as I said last week, price to hold that, or I'm not anticipating it to go that much far away, but in case if it goes there. All right, so market has already priced in for the first hike. Okay, but whatever it is going to happen, the Fed is still behind. Okay, they are still behind the curve. Inflation is sitting at 7.50. Fed fund rate is 0. Okay, so Fed has to be bullish, hawkish, all right, and dollar has to be bullish. So they have to raise the interest rate. So yeah, there is another story which you need to understand that. Okay, that can derail the market. All right, and the story is if ECB is going to raise the interest rate too, because inflation is also high in the Europe. If ECB is going to come in line and going to raise the interest rate the way Fed is doing right now, okay, then we may see policy, accident, all right, and that can also, crash the market. That can also send the shock waves in the market. All right, right now Fed, ECB is saying that they are not going to be in hurry. They can, hold on, and they can wait and see how, data is going to do. Then they will react. Means that they are letting the Fed to do what they are doing right now. Okay, they will let the Fed. They will create enough room for the Fed to play out with the interest rates, and then later on they can, Fed when Fed gonna raise the interest rate. This is going to bring the inflation down across the world, okay? Not just in the US, it will bring the inflation down across the world, okay? And ECB can hold on, all right? But make sure you keep that thing in mind that if ECB is going to come out and going to do something, then we may see, a lot of volatility into the market, okay? Then still, you're going to stick to the bullish on dollar. Okay, that bullish story is still not going to change even if ECB is going to come and going to say that they're going to raise the interest rate. But that's going to be a super bullish story on the euro across the other on those currencies where we are still having zero interest rate, like Australian dollar. Yeah, ECB, Reserve Bank of Australia is still holding on their loose monetary policy. Okay, we may see strength over there. We may see strength on the New Zealand dollar or we may see strength, on pound, right? So that's what you're looking on the dollar index. If I'm gonna look at the euro gonna be the opposite side. All right, so as we were talking about this last week, price to hold that SMA, do not go beyond that, and start falling to the downside. So it's falling, all right, and going down. So longer term target still gonna be the floor. Okay, this area, this price you are looking for on the euro dollar. Okay, so 110. So this move, the next wave which we are looking is looking to break this previous low on the euro dollar. Okay, euro dollar to just go break and clear that previous low and go lower than that up to 110. It has completed the pattern. Now it should break down and continue to keep dragging lower all the way up to 110. Price is still at 1350. Okay, there gonna be a lot of potential still on the euro dollar for more downside. So what you are last week, we were expecting it to drop. Okay, form that flag and go for another leg higher, if you remember. So go higher, do not break down that top and then drag, or slightly go higher. So we are having that. Okay, we have that pattern, we have that previous price test, that previous top went down sharply. Okay, and the target which we were expecting last week was that previous low. Okay, price still hasn't tested that, so we still got a room to run on the euro dollar. Okay, this area. So if I'm gonna pull out my fib lines, all right, then the target you are looking for on the euro dollar when market gonna open, you are looking it to visit the 70% retracement of the previous previous low. So code report doesn't matter. All right, so if code report is turning bullish on the euro, it doesn't matter. The reason why code report is turning bullish on the euro dollar, because euro is coming close to the bottom. All right, so it will take a lot of time for the euro to reverse. Okay, so this is what you are looking on the euro dollar. Okay, so continue and drag that 70% retracement of this previous bullish wave. All right, so if you're already caught that trade from that top, all right, and then we may see the moves which I'm showing. All right, so these moves are happening because of the higher volatility. So we are having extreme volatility into the market, so moves are happening really sharp. Okay, so we may see another leg higher back to that top and then drop and break down. Okay, this previous low breakdown. So this move may appear over there for another leg higher. Okay, the move which I'm showing there, this move. All right, so right now I'm anticipating it to not appear over there from the current price, go all the way up to this previous low and then give us a price section of 70, go higher, and then again extremely drop over there from that previous top. Okay, so I'm not anticipating this to continue to keep dragging more lower. All right, but this is the structure. Okay, the structure or the formation which we are having right now is very much clear over there. Okay, another leg, this leg. Okay, this leg can happen over there from 70% retracement or at the current price. Okay, so whatever is going to happen, if it is going to go for another leg higher from 70% or current price, okay, you are simply staying longer term bearish on it. All right, and what you are looking for longer, lower time frame correction to simply keep breaking. Do not go for another leg higher, as said. Okay, but make sure you are prepared for another leg higher. So the correction which is just appearing over there, okay, that correction which is just appearing over there, so it may take some more time. Market closed sharp bearish over the weekend, so this correction to slightly get more bigger, moving averages to hold, okay, and then break down for another leg lower. This is what you are looking right now if you already caught the move from the top. Okay, if you haven't caught the move from the top, you shouldn't chase this move, let that go. All right, you already missed the move from the top, then let the price, hope for the price to go back up for another top. All right, hope for the price to go back and test the top, and then you are looking. So 15, okay, 1.15 gonna be a price to watch. So slightly up, complex analysis on lower time frame or sideways analysis, okay, but the bigger daily chart is very much clear. You are simply looking price to hold the trend and continue to keep dragging lower. All right, okay, that's your structure. So that's your euro dollar and DXY, both are same. All right, so if I'm gonna look at the Australian dollar is also similar. Okay, so we are looking Australian dollar to break down this previous low. All right, this previous low breakout and go up to 127 of this previous wave. Okay, my arrows are pointing out over there, so they may go more downside. Okay, we may see similar kind of wave. All right, so this kind of wave we may see crash. Okay, but there is no reason right now for that crash, as said in the last weekly market outlook. But in longer term, they are going down. Okay, the Australian dollar is going to drop. As said previously, if yields are going to invert, they are not going to rise. All right, so if this yield, so risk on currencies are not going to continue their trend for more upside if yields are going to invert. All right, so still, after inversion, still, market gonna take some time, 9 to 12 months before we're gonna have crash. All right, but the longer term picture still gonna stay bearish on these risk on currencies. Okay, so if I'm gonna look at this 10 over 2, all right, so this yield, so if this yield invert, which is just falling very, very aggressively, all right, so if that yield invert, okay, so you're not going to see these currencies gonna rise for more upside, even if central banks are going to raise the interest rate. So they're going to continue their trend for more downside, and we may have another crash and they can break down this previous low for more downside. So right now these longer term yields are more important. All right, these yield curves are more important than the rest of the market. They are telling us that the Fed hiking cycle is not going to last much longer. Okay, after a couple of hikes they may cut the interest rate aggressively. All right, so on lower time frame, what you are looking, as said in the previous weekly market outlook, we may see that lag. All right, this more lag back to that top. So we haven't seen that lag back to that top, but they have retraced up to 70%. All right, more than 70% of this move, we can say that. All right, so more than 70% retracement of this previous bearish wave we have seen. So what to expect for the next week? Chart is very much clear. I'm not anticipating this chart to go and tag that previous top. All right, so there is still possibility that the price can go and tag that previous top, but if it is going to do that, still gonna be a longer term daily bearish opportunity. All right, so price still gonna continue its bearish trend. Okay, so let's open that, the moving averages, let's refresh it. Okay, and let's look at this. Okay, so like the way moving averages are holding on euro dollar, similar way you are expecting price to stay below. All right, like it has done there. Okay, price is holding that. So for the next week or till 21st of March, you are looking these currencies to keep dragging more lower. So for next week, simply you are looking this to break out. I'm not anticipating this to break out and continue to keep dragging lower. Okay, what I'm anticipating this to go slightly back to the previous top. Okay, test this previous top and then start falling aggressively from that previous top. All right, test that top and then start the daily bearish wave. Okay, and that daily bearish wave needs to break down this previous low and need to test that 27. Okay, then we're not going to have that expanding triangle formation. Then we're going to have a running flat like that. Okay, whatever comes, either this running flat comes or expanding triangle flat comes. All right, so you are looking price to drop for another leg lower. Hope that makes sense. You got the idea what to look for. So the previous top or previous resistance, we can say that price to hold. All right, so if it breaks down, I don't think so you should chase it. So you can chase it if you are really good to chase that on lower time frame. You have to be really good. I don't see that breakout. Even if it is going to break down, okay, still we may see retracement again back to that previous top from 70%. All right, even if it is going to break down, still we may see retracement back to that top and then again drop. All right, hope that makes sense. You got the idea. So what you are looking price to, price is already went down aggressively to the downside over the weekend, you know, on Friday. So it's going down. So hopefully, you know, you're gonna get another chance for the Australian dollar to test that top and gonna drop. So we're gonna look at that too. So same goes with the Australian dollar, New Zealand dollar, and the US dollar. So I don't think so I need to talk about the yield curve again. Yield curve is falling very, very aggressively, and we may see, you know, breakout of this previous low, and price can go and tag that 27%, all right, 27 or 64. So we are having, you know, rate decision on the New Zealand dollar in 2 weeks. Even if RBNZ is going to raise the interest rate, that is not going to put a lot of, you know, impact on the New Zealand dollar. That's not going to give a lot of strength to the New Zealand dollar. All right, the most important thing is the Fed. Okay, Fed. So market is just simply pricing in for that. So what you are looking at, again, similar like Australian dollar, US dollar. So if I'm gonna pull out my moving averages, all right, so price is far away from those moving averages, which means that the trend is really sharp to the downside. All right, and we may see breakout for more downside. Okay, analysis is very much similar like, you know, I have done on the Australian dollar, US dollar. So the structure is simple. Flag formation, flag is just appearing over there. All right, so price is just trying to break out. I don't think so you guys should chase the sell from here at the current price, okay, because if it is going to break down, you're not going to have enough return on it, okay, and price may, you know, again find its bottom over there somewhere 64.50 or 64. All right, so you're simply looking that top for the next week. All right, so if price is going to retrace back to that top, or going to form a new high, okay, like that, new high within that daily flag, then this is going to be the trade all the way up to 127. Okay, that's your structure, the way my arrows are already pointing out. So that's what you are looking, previous top or new high, and continue to keep dragging more downside. Okay, simple and easy chart. So dollar CAD, last week we were having a neutral analysis on it, and this week we are looking this to also continue to keep rising. All right, so the longer term target gonna be that, okay, this is the price you are looking for, longer term target 132. Price is still far away from that you know, top. So if I'm gonna look at the lower time frame, price is nicely holding your moving averages. All right, price to just hold those moving averages during the next week. All right, and continue to keep pushing higher. All right, so what is going to be the worst case scenario on the dollar CAD? The worst case scenario is that the price can retrace that 70%, which I'm not anticipating right now, but in case if it is going to retrace back to that 70%, still gonna be a bullish. All right, still gonna be a buy opportunity. Okay, so price already bounced off nicely from that floor, those moving averages, and running for the next leg higher. You shouldn't chase that at the current price. Okay, let the price fall for another leg lower, test that low, and then continue to keep pushing more higher. All right, so dollar CAD and pound dollar. Pound dollar is also similar like the euro dollar. Okay, so if I'm gonna make it clean, so the opportunity gonna be here on the pound for longer term. Okay, that's gonna be the wave all the way up to that 20 October lows. Okay, so New Zealand dollar is testing that, Australian dollar is testing that 20 October low. Even yield curves are pushing back to that 20 October lows. All right, so pound is being supported by the higher interest rates from the Bank of England. Bank of England is saying that they're gonna raise they already raised the interest rate, and they said that they may raise the interest rate on the next meeting as well, so which is giving some support to the pound. All right, but the story is the dollar. Okay, pound is not the story. So the story is the dollar because of the higher inflation. Fed is the story. All right, what they are going to do, are they going to raise the interest rate with the 50 basis point? If they are not going to raise the interest rate with 50 basis point, let's see if they are going to raise the interest rate with 25 basis point. Okay, then there's going to be more pressure on them. All right, there's going to be more pressure on, I mean, inflation no gonna fall. Inflation gonna still slowly keep climbing. All right, the trend on the inflation is bullish. Inflation is rising, not falling. The trend is still bullish on the inflation. Every month we are having higher numbers on in the inflation. Okay, so there are going to be more pressure for the next meetings on the Fed. Okay, so still going to be a longer term bullish story for the dollar. So whatever Fed is going to do, Fed, as I said in the last meeting, weekly meeting, that Fed, Fed has trapped themselves in a box. All right, if they hike, that's going to be a bad story for the stock market. If they are not going to hike, all right, inflation going to keep pushing more higher. There's going to be more pressure on them from from politicians. Okay, so they have trapped themselves in a box. So they have to raise the interest rate. They have no way left. Okay, if they're not going to do that, interest rate is, inflation is going to rise further. Okay, if they are going to act, stock market is going to drop. Stock market is already dropping, all right? Okay, because of higher valuation. So dollar going to be a longer term bullish story. All right, so you are looking this to go all the way back to that previous low. This top, this bottom, break this bottom, till 21st of March. We're expecting that the price going to break down this low till 21st of March. All right, so 14th of March going to be important. We may see, a sharp, wave going to be already on its way. This daily wave already going to be on its way till 16th of March. All right. But we're expecting this time pound to break down and continue to keep dragging lower all the way back to this previous 29, okay, 129. So what to look for on lower time frame? So we still made, last week we were talking about this pattern formation, if you remember. Okay, this formation we may see, okay, expanding triangle formation. Okay, price is, trying to form that expanding triangle formation. All right, and trying to find its top over there. So that's it. Yeah, its top. So it's trying to find its top, and what you are looking, just simply that wedge to break down. So you shouldn't chase the sell opportunities over there in case if price is going to fall very, very aggressively from current price. Okay, then you can chase that on lower time frame, and can look for this to keep dragging lower all the way back to that previous low. Okay, otherwise wait for the price to test that previous top, okay, and then you are looking for the bigger wave to start from that previous top and continue to keep dragging lower, or slightly go more higher. Yeah, form higher high within that wedge. All right, so form higher high within that wedge and that daily wave to continue higher high, or test the previous top or higher high. All right, so higher high within that wedge, or test the previous top. The structure is clearly showing you what you are looking for on this chart. Okay, so it's struggling. Your daily time frame is really, showing you a signs that what is going to come. Okay, we had bigger correction, as in the last weekly market outlook. We have spoken about this, that why the bigger correction which we have seen over there, why it hasn't changed the the bigger time frame, why it hasn't changed the bearish wave. Okay, so we got more data last week on the CPI in the US. Okay, that's sending a strong signal for the hawkish Fed. All right, so hope that makes sense. So pound dollar, use reasonable risk all the time, guys. Okay, so dollar chief going to be a longer term buy opportunity. Okay, but right now there is no sign at the moment. Okay, but as we know that Fed is setting up for hawkish policy stance, okay, then this is going to be a buy story as well. So right now you don't have a perfect opportunity on the dollar chief, okay, and we still may see some pressure on the dollar against the chief, okay, or price can test this previous low or this ABC move. So you shouldn't chase the breakout over there and let the price just simply fall back to this previous low or this previous low, okay, and then you are looking this ABC move to continue to keep pushing more higher. So it's a sideways market. You don't have a perfect opportunity right now, all right, but strength on the other dollar pairs will also push this dollar pair to higher against the chief as well. All right, so if I'm gonna look at the dollar, all right, so let's look at the yen pairs, and then we're gonna look at the dollar yen within that too. So last week we were expecting euro to fall against the yen. Okay, so this is going to be the important pair for next 3 to 4 weeks. Okay, so we are expecting Euro Yen to break this previous low, all right, and visit that 27. Okay, visit that 27 price. Okay, visit that 27, this area. So 27 fib, all right. So or in terms of price, 126. Okay, so last week we were expecting it to give us ABC move and then drop. Okay, there. So we were expecting it to form that ABC move. Okay, first of all, on this 15-minute time frame. So there, we were expecting it to break down that that ascending channel. All right, and this move. This is the formation we were expecting, breakdown, and for another leg. Okay, form that ABC move and then continue to go higher, and then do not break up that top and then drop. Okay, so unfortunately we didn't see that move. Okay, this move, we have seen this leg. Okay, this leg appeared. All right, this leg appeared, so we didn't see that leg. All right, we didn't see that leg, so we have seen another leg higher, which I was anticipating after having that leg. All right, so I was anticipating this to go test that top. All right, do not break out for the next leg higher. So we have seen, slightly formation is appeared over there, the formation which I was talking about in the last weekly market outlook. All right, but it was stretchy for more upside. Okay, it was stretchy for more upside. Okay, but the formation which I was showing here on the Euro Yen, similar formation I was talking about on Euro Dollar. Okay, there. So we have seen that formation there, if you remember. Okay, that's what I was talking about. Okay, this ABC move. Okay, we got a breakout. All right, this leg, and then it went higher, tested that top, and then dropped. All right, so we got a couple of news last week from the Bank of Japan, which caused this pair to slightly break that top. All right, this area, this top. So it slightly went higher from 31, 32 to 33. Okay, 100 pip move appeared over there. So it hasn't changed anything on bigger time frame. All right, so this 100 pip move hasn't changed this 100 pip move. So the move which we were expecting, it is there. Okay, it is there. That's the move which we were expecting. So it's appearing over there. So is it there more room for this pair to run for the downside? Absolutely yes. Okay, absolutely yes. So the longer term target gonna be, as said, 126 or 27 of this previous low. Okay, or this area 126 or 27%. 127. Okay, extension of this bearish move. Okay, this bearish move. So what to look for is the question. So has the bearish wave started for the downside? Okay, yes, it has started. Okay, is there any possibility that the price still can visit that previous top 133 again? Yes, there is possibility. Okay, as I said, we are having high volatility because central banks are changing their policies. All right, and that's causing the volatility into the market. Okay, so if I'm gonna look at the VIX, there is the lower time frame. So there is the volatility. So we can see volatility is just simply increasing in the stock market. All right, so previously it went up to 40, right? 40, close to 40, and then dropped. And when news broke out that Russia is going to invade in the Ukraine on Friday, actually that was a fake news. Okay, we can say that wasn't a credible news. Okay, so what Biden administration was trying to do, they were trying to hide the higher inflation news. Okay, so when that news broke out, okay, no one was talking about inflation. Inflation went backside. All right, and all news channels started to talk about that we are going to see a war next week. All right, but what happened over the weekend? All right, over the weekend everything is just calm. They phoned each other and they're saying that nothing is going to happen. All right, So that's causing a lot of, we are having news, okay? A lot of news are just hitting to the market. They are causing these strong, aggressive move. Volatility is just appearing over there. So the next move, which I'm anticipating on the VIX, all right? So I'm anticipating that we may see next sharp leg, okay? That sharp leg may start between the 25th of February to 21st of March, okay? So within next month, okay? 28 Feb to 21st of March, I'm anticipating that this is going to break that previous, VIX going to break that previous top, okay? We're going to see, somewhere around, 40 or 42, all right? 42 or 43, VIX can go up to 43 areas, all right? So that's the reason we still may see another leg lower, okay? That can happen. It can drop sharply lower and then again can rise during at the end of this month, okay? That can cause you to have another leg higher, okay? We may see another leg higher like that, all right? Price can still visit that previous top. If it is not going to visit that top, okay, we may see a big correction over there like that, big 4-hour time frame correction, not daily, okay? And then again drop back to that previous low. So this is not there yet, okay? That formation is not there yet. So you are not looking for that, but make sure you are prepared for that, okay? Another test of this top may happen, okay? We still can see that the price can tag that previous top. So what to look for, okay? Let's talk about that. Where is the opportunity? What you are looking for? Okay, so price, what we were expecting 70% retracement of this previous impulsive wave from that top to this low, all right? So you're still looking price to visit that 70% when market gonna open. All right, so price to visit that 70% first, okay? And if it keeps falling very, very aggressively, then keep falling, all right? Keep falling and go to our longer term target, okay? If I'm gonna pull out another chart for you to understand that, okay, this is what you are looking for. Okay, so price has even gone beyond the 70% retracement on this chart. Okay, so this is what you are looking. Okay, so it has even gone beyond that 70%, okay, slightly, but closed above that, this bullish move. So similar way price to at least tag that 70% retracement of this bullish move. So what that mean is, okay, that mean we still may see another leg lower, this opportunity, okay, like this leg, okay, this leg still can appear over there, all right? And you are looking first that move, okay, if that keeps dragging more downside all the way. So watch first this chart, okay? If this chart keeps dragging lower, break this previous low as CAD Yen. If that breaks the previous low, okay, then you can expect this to keep dragging more downside all the way back to that previous low or 126. Okay, hope that makes sense what you are looking. So if I'm gonna look at that, yeah, more precisely on the Euro Yen. Okay, so do not forget that we still may visit the top again. Okay, keep that thing in mind. If it is going to visit the top again, still gonna be a longer term short opportunity. Okay, so when market gonna open this lower time frame, all right, so price is correcting, heading back to those moving averages. Okay, so you are looking for breakout setup over there. Okay, let it slightly push more higher, okay, and breakout opportunity. Once price gonna break that flag, then continue to keep dragging more lower all the way up to 70% retracement of this previous wave, previous bullish wave. Hope that makes sense. This is a good chart to watch ahead of the Fed rate this year, all right, or on falling yield curves. Okay, pound yen is also similar like that. All right, so the chart is very much clear now. I don't think I need to talk about that a lot. So you are simply looking price to not, close above that previous top. Okay, like I said in the last weekly market outlook, okay, there was the possibility for another leg. Okay, we have seen ABC move over there. It went lower and then went higher. We did not get that bigger wave. Okay, but it is setting up for that daily wave to the downside. All right, so there is still possibility that the price can tag this top for another time. It can tag that 158. Okay, it can tag that top. If it is going to tag or slightly going beyond that, it is not going to change this bigger daily, sell opportunity. So if I'm gonna make it more simple, then you are simply looking that previous resistance to hold and pound yen to drop from that top. Okay, this opportunity, and the target gonna be 127, 147 in longer term. All right, so short-term target gonna be over there on lower time frame, but the longer-term wave we are expecting it to go all the way up to 147. Okay, it has already dropped significantly. Similar way you are watching this chart, like euro yen. Okay, this correction, 5-minute correction, is just trying to appear over there. This to finish and sharp breakdown. Okay, sharp aggressive breakdown and continue to keep dragging more lower. So if don't understand these lower time frame corrections or pullbacks, just simply stick to the daily time frame. All right, stick to that daily time frame, and you are looking it to drop. Pound dollar, we have already spoken about that. So this chart is also setting up Norwegian krone and yen. All right, this is also this chart needs to visit the 20 October lows too. So why this is not falling? The reason is very much simple, guys. We are having higher oil prices. Okay, higher oil prices gonna sustain, very less likely gonna sustain at such levels. Okay, the yield curve charts which I have shown you, they're gonna matter. All right, if yield curve charts are going to drag sharply lower, going to invert, all right, you're gonna see crash in commodities prices. Okay, I don't think so we're gonna see stagflation. Okay, then inflation gonna crash to the downside very, very aggressively. Okay, and that gonna crash the oil too. Right now, OPEC countries are trying whatever they can to keep the oil prices higher. All right, but higher interest rates can curb the demands. All right, which can bring the energy prices lower too. All right, and currencies too. So what you are looking for on this chart, similar analysis. Okay, so 70, we were expecting 70% retracement. Okay, so 70% retracement of this previous wave on euro yen. Okay, so this chart is also very much similar like that. So 70% retracement comes, just a second. All right, so not this wave, so the 70% retracement of the current wave. All right, this wave. Okay, so we are expecting it to tag that 70% retracement. So wave is already on its way. So is there a possibility that this chart still can tag that previous top? Yes, it can tag that previous top. Okay, we may see another leg higher within that wedge, this top. Okay, back to that top, and then continue to keep dragging lower. So what you are watching, so you're watching similar wave and market open, prices to break out. All right, so break out and continue to keep dragging lower. Okay, these 5-minute flags which are just appearing over there, these flags to slightly get more bigger and break out. Okay, and 70% retracement, this 70% retracement, this leg. And once price gonna finish that leg, watch if it is going to hold that 70% retracement area, going for another leg. Okay, let that complete, and then again longer term you are looking for these charts to break down. Okay, Uzi yen also similar like that. As said last week, there was the possibility for this chart to go for another leg. All right, so we have seen that leg. Okay, example which I have, Aussie dollar US dollar chart, I have used that chart. So you have seen that so the longer term target gonna be 20 October lows. All right, so 20 October lows all the way back to that previous low. So what you are simply looking, price already made its bullish wave back to that previous top. As said in the previous weekly market outlook, if it has this previous top or retrace 70% of this previous wave, this is still going to be a bearish story. So price just retrace from that or drop from that previous top very, very sharply to the downside. So what to expect from this chart? Is there a possibility for this chart to go for another leg higher? Okay, this leg, the leg which I'm showing, there is possibility, okay? And if that comes, still going to be a longer term sell opportunity on it, okay, up to 20 October lows. So what you are looking, this, do not forget that when you are going to get into the trade within these areas for continuation to the downside. All right, so this next, another leg can happen over there. So just simply go to your lower time frame, same analysis like other yen pairs. Okay, this correction which is just appearing over there, this to break out. All right, and 70% retracement of this previous wave first. All right, this previous wave, 70%. So price to break out this correction which is just trying to appear over there, break out, and this is the trade. Okay, and if it keeps falling, keep falling sharply and break these lows too. If not, okay, then we may see another leg higher. Okay, this leg, and that leg also going to be up bearish for longer term. Okay, so if I'm gonna look at the lower time frame, all right, this correction which is just appearing over there, that to slightly get bigger, okay, and then break out and visit the 70% tracement area. All right, that area, and in best case scenario, keep falling sharply. If not, then go higher for another leg. Okay, and this bigger ABC move, we can say that. All right, this bigger ABC move or wedge to break down for longer term. So Australian dollar and yen. So CAD yen is also going to be a longer term bearish opportunity, guys. So I do see a more room on this chart as with compared to the others. All right, if yield curves are going to invert, okay, then these pairs are not going to stop. Okay, we're going to see big run on these pairs, okay, and they're gonna break these lows too. Okay, so yen, normally move after the dollar strength. All right, so there's going to be plenty of room till 2024 December. Okay, they're going to be a super bearish till then for 2 years. Okay, so we can say that 2 years you're going to see trending move to the downside on these charts. Okay, so that's the CAD yen. Okay, as last week we were I have shown you that possibility. Okay, if you remember, there was the possibility for another leg, 70% retracement of this previous wave. Okay, so price slightly went higher than 70% and then started to fall very, very aggressively. So again, is there a possibility for another leg higher? Okay, price can go visit that previous top or new high. Yes, there is. We still may see another leg higher. Okay, but that's going to be a bigger, daily opportunity for longer term to the downside. All right, do not forget this one more leg on yen pairs. Okay, this one more leg, that one more leg possibility still exists over there. Okay, so if that is going to come, okay, let's say if next week we are going to see that next leg. Okay, this is going to complete our bigger daily structure, bigger daily pattern formations across the market. All right, and that last leg will confirm that we are going to see big drop. All right, so at this area, this might be a top. Okay, this might be a top, but I'm still not confident that price has found its top over there for the bigger daily wave. Okay, this might be a daily top. All right, so that's the reason you should watch lower time frame corrections over there at the current price, in case if price has found that daily top and going to drop for longer term to the downside. Okay, so that you cannot miss those opportunities for continuation to the downside. But once you start looking for continuation trade to the downside, keep make sure you keep that thing in mind, that the daily structure still hasn't completed yet. Okay, and still got a room to run for another leg higher back to the previous top before we are going to see daily wave to the downside. Okay, if that wave start to appear over there, this day, one more leg, then that wave can take, that wave can stay there till 28 February. All right, that wave can stay there till 25 to 28 February, and then we may see, you know, a sharp, bigger daily wave to the downside after 28 February to the downside. All right, so that's the important thing that you guys need to keep in your mind when you are going to look for that bigger daily wave. Okay, that bigger daily wave gonna appear over there. It's a matter of time. All right, so you are watching them very, very closely. Okay, so same analysis like other yen pairs. What's the next, you know, short-term trade you are looking right now is the 70% retracement of this previous bullish wave. Okay, so if I'm gonna find my 70% retracement of this previous, you know, bullish wave, my 70% retracement comes somewhere there, okay, within these areas. So price to break down for this one more leg lower, okay, this area, or in best case scenario, this previous low, or 88, all right, that move. So if I'm gonna go to the lower time frame, moving averages, all right, so price is already setting up for a breakout, okay, couple of more candles to form, all right, and then break out sharply to the downside. Okay, so if I'm gonna use this chart for your understanding, that's what you are looking right now. Okay, or let's look at the 15-minute time frame. There you're gonna see, so the 5-minute correction which I'm showing here, okay, that can slightly get bigger. All right, this slightly can get bigger like that, like this chart has done. Okay, and this is the breakout. So this is the breakout you're gonna watch here. Okay, once price gonna go for a 15-minute time frame correction, okay, this is the breakout. That's the breakout you're gonna watch. So once that breakout comes over there, price to continue to keep dragging lower. All right, hope that makes sense. So make sure you trade with care at such levels, okay, at such prices, because price has already moved aggressively to the downside, and you may not get a good entry, specifically on the CAD Yen. Yeah, if oil going to fall very, very aggressively during the next week, okay, if oil is going to fall sharply from the top, then definitely CAD Yen gonna continue its bearish trend to the downside, okay? Then you are looking that to go even lower than that 70% retracement. Okay, so Kiwi Yen is also very much similar like that. Okay, let's talk about a different thing, guys. Okay, why we are staying bearish on the yen pairs? Let me tell you. So let's just look at some previous old chart. Let's back test. Okay, if I'm gonna use these two charts for your understanding. Okay, so what happened in what happened here? So we had a crash, okay? We had a sharp crash on 6th of October 2008. All right, there we can see 6th of October we had a crash. Okay, so we got a crash. Okay, so we got a crash in October, okay, 2008, and we got a strength on the dollar, we got a strength on the yen, and then what happened after that? Okay, we need another chart there. Let's just pull out that chart here. Okay, so what happened after that? When we got that crash, central banks, they slashed their interest rates. Okay, so we have seen, we have seen, you know, Fed cut interest rate from 520 to or there, okay? Simply, we can say that interest rate went to zero. All right, interest rate throughout the world went to zero. So interest rate went to zero, then what happened? Dollar went for a cyclical weaknesses. Okay, dollar started to fall sharply. All right, and similar way, yen, because dollar was a safe haven, and Fed or central banks were holding their ultra loose monetary policy, that was causing the weaker dollar. All right, and other risk on assets to just keep climbing. Okay, equities were just keep climbing at that time. All right, and the safe havens were just crashing. Okay, similar way, Australian dollar was rising. So this is not the only one currency which is rising. All right, so Australian dollar, New Zealand dollar, all risk on currencies were rising significantly. So what happened then, as long as Fed held their ultra loose monetary policy, we had that trend. All right, and somewhere close to at this area, okay, somewhere there within in 2013, central banks started to communicate that they're gonna end their ultra loose monetary policy and gonna wind up their QE program and gonna start raising the interest rate. Then what happened? Okay, then dollar started to gain, dollar started to price in, and dollar started to gain, and Australian dollar started to lose its value. So the point we are having here, why we are bullish on the yen. So the point is here, okay, within this area. So the point is that the dollar remained weaker. Okay, dollar remained weaker and formed that wave. Okay, went higher from 21st. Okay, so from 31st May to 2010. To 1st of August 2011, remained strong bearish, and we had that one more lag, but we had a sideways market, okay, at those dates. So all right, so within these areas, within these dates, we had a sideways market. So yen remained sideways. Yen wasn't losing a value. So once dollar finished its bullish move, then yen went for a weaker wave. Okay, then yen started to get a weaker, and we have that next bullish leg on the Australian dollar against the yen. All right, now the point, hopefully you got the point. Okay, I don't think so you guys are confused. All right, so let me tell you again. So we had a crash, we had a recession. All right, dollar crashed. All right, Australian dollar crashed. Central banks, they slashed the interest rate to zero. Dollar went for a cyclical weaknesses. Dollar is a safe haven currency. Equities went for a higher, valuation. They started to rise, and yen started to get weaker again. Okay, and there we have seen that, yen pairs went for a sideways market. Okay, and then later on they broke out. All right, yen got more weaker. It's finished that previous top there where the dollar has already broke out. Okay, dollar broke out that previous top, right? This previous top, and then yen finished that previous top, found its top, and then we have seen, let me just remove those arrows. Okay, then market started to price in for the higher policy change or higher interest rates, and dollar started to price in. Okay, when Fed raised the interest rate, dollar was significantly priced in. They started to raise the interest rate. The first hike came over there at that date in October 2016. All right, we got a first hike there. All right, so somewhere there within these areas. Okay, so first hike came over there. All right, and dollar was already priced in for these moves. All right, so after that, okay, after a couple of years, yen started to gain its value. Okay, when dollar already priced in for the hikes, then yen started its bearish wave. All right, there, and since then, yen remains strong. Okay, and that is the wave came after that, when dollar already priced in for that move. That's the wave came after that. So you can check these dates later on. You can backtest that. All right, you can work on these dates later on and can check that. So what's happening right now? All right, what's happening right now? So if I'm gonna remove everything from my charts. All right, so what's happening? What has happened? All right, so if I'm gonna pull out Fed funds rate here, okay, what happened? We had a crash. All right, so what central bank did? They slashed the interest rate to 0. Okay, Fed fund rate went to 0. All right, so dollar started to lose its value. Okay, went higher. Australian dollar went higher. Dollar lost its value. All right, and yen also lost its value there too. All right, so if I'm gonna pull out another chart on it, US 2-year yield. Okay, so US 2-year yield is rising significantly. Okay, went up to 150. What US 2-year yield is telling us? This is telling us that Fed has to raise the interest rate. Okay, they have to raise the interest rate, and once Fed gonna raise the interest rate, Fed fund rate, as market is expecting that in March we can have 50 basis point hike. Okay, somewhere there. So if Fed is going to hike with 50 basis point, okay, then we're gonna have Fed fund rate somewhere there. Okay, which I'm not anticipating. All right, so they're gonna bring it to 25 basis points somewhere there. But let's say what market is expecting right now. So 50 basis point. So dollar is already pricing in for that move. Okay, these moves. Dollar is already pricing in for these moves. Dollar is already gaining. All right. So what you should expect from the yen to do? Okay, yen to also drop like the way it has done there. Dollar. All right. Your yen also need to get stronger in longer term. So hope that makes sense. This is a very important, part, very important, analysis. So hope that makes sense to you guys why we are, staying bullish on the yen. Even yields are rising. Okay, so normally when we see that yield goes higher, we see that the safe havens, they lose their value. All right, because policy is going to be normalized from the central banks. So right now what's happening? Yields, short-term yields are rising, all right, but longer-term yields are not rising. Longer-term yields are falling. Longer-term, people are taking their money away from the risk-on assets, all right. They're selling risk-on assets. Either they are holding cash, or they are putting that money in longer-term bonds. All right. So they believe that this cycle, this tightening cycle, is not going to last for longer term. All right. Maybe after a couple of months or not a couple of months or a couple of years, we can say that Fed needs to slash the interest rates back to 0 again. That's what longer term investors are expecting, longer term bondholders are expecting. All right. So dollar is already pricing in for that short term, hiking cycle. All right. Then you're going to see the other safe havens also going to follow the dollar, specifically the yen, against the risk on currencies. Okay. So that's the main reason, guys. So if I'm going to pull out my fib lines, so there you can see dollar has already priced in for 38% of this previous wave. Okay, but yen hasn't priced in for that tightening. Okay, so yen has to price in. So that target comes somewhere there at 28%. All right. So we may see drop on Australian dollar and yen up to 76%. All right, so hope that makes sense. Now let's get back to these charts. So that's the reason, okay? That is the reason this pair is struggling to push more higher. Kiwi is struggling to push more higher. It is sitting at close to the 38%, or we can say that 20 October lows. All right, so 20 October lows still far away from this chart. All right, so we got a lot of potential still left on this chart for longer term. All right, so why this is struggling? New Zealand dollar is struggling because market already know that RBN, they have raised the interest rate and they have already shown their cards. All right, so they have already shown their cards. So inflation is also in control. We can say that in the New Zealand. So ultimate strength going to be on the yen. So we can have that longer term wave to the downside. And if I'm going to look at the indicators, okay, so indicators are also pointing out that there is no momentum for upside. Okay, we are having divergence. All right, so there is no momentum for the next bullish wave to happen. Okay, the momentum is just simply fading over there for more downside. So buyers are not interested over there. So if I'm gonna look at the lower, so this analysis apply on all yen pairs, almost on all yen pairs for longer term. All right, so what you are looking, so if I'm gonna pull out the daily time frame, okay, price is struggling and staying below the moving averages. Is there possibility for the New Zealand dollar to go for another leg higher and test that previous top like other yen pairs? Yes, there is possibility, okay, but that will create a short opportunity. All right, back to that previous top. So what we were expecting last week, we were expecting 70% retracement, okay, this to at least retrace up to 70%. Okay, so price retrace almost 70%, or we were expecting it to form a wedge formation. All right, so wedge formation, or in worst case scenario, that previous top. Okay, so it never tested that top and started to fall after 70% retracement. So if I'm gonna, look at the lower time frame, 1 hour time frame. So what you are looking, so you are looking this to first tag the 70% retracement of this bullish wave. Okay, where it comes there. So it is already about to tag that previous low. All right. So this 70% retracement, and there's going to be a short-term opportunity on lower time frame. I would suggest you to not chase that. This is a very small opportunity, 70 pip move. All right, but on other yen pairs, there are going to be a plenty of returns once they're going to start falling. So short-term opportunity is going to be much better on the other yen pairs. But this is what you are looking, same analysis like that, like others. So what is the worst case scenario? Because the worst case scenario is that the price can test this previous top, okay? But this is not going to change the bigger picture, okay? Daily picture, which I have just shown you. So lower time frame analysis is similar. Like you can go if you want, all right? You can go for short-term continuation, move to the downside if you want. So then let this 5-minute correction to complete, okay, and similar breakout, the breakout which I have shown you on other pairs, okay. So this move to continue to keep dragging lower. Hope that makes sense. So dollar yen, okay. So the analysis which I have made over there on other yen pairs, so that applies on the dollar yen too, okay. So once we're gonna see that strength on other yen pairs, like dollar is already pricing in for hiking, okay. Once dollar gonna start to end that pricing in, so we're gonna see strength on the yen pairs gonna start falling, then you're gonna see dollar yen gonna fall too. So dollar yen may take some time for that big drop like other yen pairs. All right, so make sure when you are looking to short it from the top, trying to catch the top, it's bit risky, specifically ahead of the March Fed meeting. All right, that's gonna slightly keep the momentum for upside rather than to the downside. But once Fed gonna finish their hiking, then we're gonna see that dollar yen gonna start playing to the downside for longer term. All right, so the picture is very much clear over there, like other yen pairs. So it's slightly different from those yen pairs. Okay, we still may see another leg higher like that, okay, and drop. So I think you should not short dollar yen for next couple of weeks, all right, because it's not ready for the longer term drop. Fundamentals are not supporting that bigger drop to the downside yet. So after the for longer term, all right, so after the Fed rate is seen in March, then we may see significant strength on the yen. All right, so then that's going to be the timing to short it for the downside. So let's just stay neutral for a while, okay, for the next week. And the only reason to short the dollar yen for longer term is that if really we are going to see a war in Europe, okay, if war is going to break out, that's going to be the exceptional circumstances for the dollar yen to drop sharply to the downside, okay, because that's gonna bring a strong risk off move. All right, people gonna run after the bonds. All right, people gonna sell the stock market, gonna sell the risk on assets. Okay, they're gonna be traditional flight to the safe havens. Okay, and yen is a traditional safe havens. All right, that's the reason when news broke out last week on Friday, we have seen traditional flight to safety. Okay, we have seen strength on the yen, and we have seen strength on bonds as well. Okay, equities went lower. What's happening? in last 4 or 5 months, yields are pushing higher. All right, yields are pushing higher, stocks going down. All right, and at the same time, bonds going down too. Normally, when stock goes down, we see strength on the bonds. Okay, bond prices, goes higher, yield goes down. But right now, market is expecting that inflation is high. Central bank's gonna raise the interest rates. We're gonna have higher yields. They're selling bonds. Okay, and it makes perfect sense. Okay, but the event which we had last week, okay, that was a traditional. We have seen traditional flight to safety after that event. Okay, and we have seen weaknesses on the stock, strength on the yen, strength on the gold. All right, and strength on the dollar too. Okay, and people went for bonds as well. All right, so that's the exception on the dollar yen. If let's say really we are going to see a war, which I'm not anticipating at all. All right, that was just a fake news last week, and if that's going to happen, then you can expect it to drop very aggressively to the downside. All right, so still, even if it is going to drop to the downside very aggressively, still it's going to recover sharply for upside. Okay, because the facts after that not going to change. All right, so Fed has to do something to bring the inflation down. All right, so inflation is high, so yield's still gonna push higher. Short-term yield still gonna push higher. So same analysis on the chief yen. Okay, we are looking for chief yen to drop aggressively to the downside. All right, so this is the move. Slightly be cautious on these two charts, dollar yen and chief yen, as long as yields are pushing higher. All right, or you may avoid trading on these charts. Okay, and can choose risk on currencies against these safe havens for longer term. All right, so SEC is also dragging lower sharply and almost finished its wave. That's the wave we are expecting on other yen pairs. Okay, by the way, that's your leading indications. That's what you are expecting on other yen pairs. All right, so I think you shouldn't chase this chart anymore. All right, and the wave has already happened on this chart, and there is very good chance that this time this pair gonna break that previous low and gonna continue to keep dragging more downside up to 20 October lows. All right, so this 20 October lows. So it has already started to drop from the previous top. Last week we were expecting it to drop from the previous top. All right, another leg was possible. All right, this leg, but that leg didn't tag that previous top expanding triangle. So similar formation. Okay, so similar formation I have, similar formation we may see on the Australian dollar, US dollar. Okay, that's what I have shown you. All right, this running flat. Okay, I have shown you expanding triangle formation and this running flat possibility as well. All right, we didn't see that one more leg, so keep that thing in mind. Okay, so some charts they have extended a lot because of volatility. Okay, because of volatility, because of ECB, they have slightly changed the bigger structure. I mean, bigger 4-hour time frame structure. All right, so 4-hour time frame, but the bigger weekly, daily patterns are still same. So you shouldn't chase that chart. So we are still expecting this to break down to, okay, so this is still climbing for more upside. 127 is the target. Okay, so this may break down later on once others gonna finish their moves. Okay, but this is what I'm anticipating. It has retraced 70% of this move. All right, this move retraced. Okay, expecting it to drop aggressively, and this is the move. So slightly risky right now. Okay, but that's the wave you are watching. If you are trading on it, that's the wave you are watching on it. US oil. All right, so US oil, again, guys, last week we have seen some positive news that Biden called, phone to King Salman and asked for him to do something to bring the oil prices down. All right, and over the weekend on Friday, we have seen strength on oil because of the news which broke out from White House. All right, so again, I don't think so that the rally which we are having on oil is not going to sustain, and we are going to see a very strong drop on the oil. Okay, I still see a sharp drop is going to come out on oil, similar like that. And the longer term drop, I'm expecting it to 22-bar lows. Right now, this move is not making sense at all. Okay, if you're gonna look at the fundamentals, if you're gonna look at the OPECs, okay, OPEC countries are not releasing enough oil. All right, and war, okay, Russia, if we are going to see sanctions on Russia, all right, so Russians may stop, selling their oil. They may stop, or even, we may see, sanctions on them from West. Okay, so that's going to be a super bullish story for the oil as well, for more upside. All right, so there is another thing which we need to keep in our mind, and that is US, and West is still talking with Iran on nuclear deal. Okay, if that deal is going through and Iranian oil is going to get into the market, that's going to be a bearish story for the oil. All right, and if that is not going to happen, then still there's going to be a lot of pressure on governments across the world to bring the oil prices down. There's going to be a lot of pressure on OPEC countries to do something to bring more supply into the market. All right, so if OPEC countries are not going to release enough supply into the market, okay, then what's going to happen? Inflation going to keep rising. Right now, inflation in the US is at a 40 years level. All right, inflation in the US is at a historical level. So we haven't seen inflation at that level in last 40 years in the US. So if oil is not going to drop, then inflation going to keep pushing more higher. So oil has to drop. All right, inflation has to come down, and interest rates, has to go up. Interest rates needs to push up. So that's the longer term fundamental analysis. All right, we still, oil cannot sustain its rally for more upside based on these longer term fundamentals. All right, but what are the short term fundamentals? So short term fundamentals are still saying that oil is strong for more upside. Okay, hope that makes sense, guys, for longer term and for short term. So what we may see, okay, what we should look for on oil. So this is the longer term picture. Okay, longer term picture is still bearish, looking for oil to go all the way up to 22-bar lows, and lower time frame. All right, lower time frame price is still holding that bullish trend, 4-hour time frame trend. All right, so if you see another correction like this previous one, first of all, you are not looking for correction. Okay, you are looking for a sharp, aggressive breakout. Okay, sharp, aggressive sell-off. That kind of sharp, aggressive sell-off. So if I'm gonna copy paste some stuff over there, this picture is not going to change. Okay, this analysis is not going to change as long as oil is holding its bullish, trend. Okay, so you are expecting that sharp sell-off, waiting for that sharp, aggressive sell-off to come out. All right, so that sharp sell-off should at least come out on 1-hour time frame or 4-hour time frame. Okay, so if you're gonna start watching that sharp sell-off on, let's say, 1-minute time frame or 5-minute time frame, that may distract you. All right, you may distract. Okay, you may start following that 5-minute or 15-minute, sharp sell-off, and that can go for a correction and can push up for another leg higher. So do not follow that, lower time frame sharp sell-off. Okay, let the price fall at least on a 1-hour time frame. If you are good enough and you can pick that sharp sell-off, you can join that. If you cannot pick that, then let the price first finish that sharp sell-off and let the price correct after that. Okay, let the price correct after that, then start chasing the longer term bearish trend to the downside. All right, so that's what you are looking first, a quick, sharp, aggressive sell-off. If that's not coming over there, okay, then price to simply go for another correction, okay, like it has done previously, and another push up. All right, so like it has done previously there, okay, that correction gonna hold these moving averages. So let me go to slightly on a lower time frame where you're gonna see clear. There you see, okay, so price is clearly holding those moving averages. Okay, so that correction gonna hold those moving averages over there again and gonna break up for another leg higher for short term, like price is doing right now. Okay, so it's gonna go for another bullish leg than this one more bullish leg, and that bullish leg may break out $100. All right, that one more leg can break out $100 mark. So that's what you are watching on oil. Okay, so sharp seller first. If that comes out, top is going to appear over there on oil. Okay, if that's not coming, then okay, so again, this sharp sell-off is not going to happen without reason. All right, there are going to be reason behind that sharp sell-off. All right, as you know guys, inflation is high. Some countries are really struggling with energy prices. Okay, and there is also pressure on the US as well. Okay, so there are going to be reason behind that sell. So once that sharp sell-off going to come out, you are looking for reversal. Okay, if that's not coming out, means that governments or politicians are still trying their best to do something, all right, or trying to pressurize the OPEC countries to do something. Okay, then you're gonna see another shot, one more push up. Okay, will that one more push up, is that one more push up going to change the bigger picture which I have just explained to you? No, that's not going to change, guys. Okay, that's not going to change. Inflation is at 750, rates are close to zero. That's not going to change. Okay, that bigger picture, longer term picture gonna still stay there. But yes, short term picture can change for a while. Hope that makes sense, guys. So oil is a still longer term bearish story, short term still bullish, longer term bearish story. All right, so UK oil, Brent is also similar like that. I don't think so. I need to talk about that too. Okay, so longer term picture is a bearish, short term picture still bullish as shown on the 2-hour time frame. All right, if I'm gonna pull out my moving averages. Okay, there you see price. Every time you see that the price is struggling, moving average is holding there within these areas. Okay, there are gonna be a one more up leg like that. Okay, but once price gonna come close to this top, okay, you are looking for a sharp sell-off. All right, like I have already explained on the WTI. All right, this sharp sell-off. All right, so now let's go and look at the BTC. BTC, I'm still anticipating Bitcoin to drop for another leg lower. Last week we were expecting it to visit the 70% mark. Okay, that's still there. Okay, that's still there, but after going for another leg lower, as we know that Fed is simply looking to raise the interest rate. Okay, once they're gonna finish that hiking, once they're gonna raise the interest rate, then we're gonna have less strength on dollar, we can say that, right? Or we can say that perception can change. Right now, what is the perception? The perception is that crypto market is under pressure because of the central banks. All right, and the longer term picture is still bullish on the Bitcoin. All right, the longer term picture is still bullish. Okay, I still see that it is going to at least visit that 58 or 57K area. Okay, and for longer term, I see that Bitcoin is going much higher than this price. All right, so I see that Bitcoin is going higher, much higher than this price. Okay, so higher than this price, higher than this previous top in longer term. But right now, I see another leg. Okay, another leg to appear over there, price to visit that previous 30K mark, and then so what you are looking, if you are trading for the downside, either way you are trading, trade with precautiously. All right. So we may not see another leg lower, and it can slowly can keep pushing more higher. Okay, there is possibility. So we need a sharp sell-off like that. Okay, sharp sell-off, sharp breakout. If that correction gets slightly more bigger, right, like that, still you are looking that to break out sharply to the downside. All right, like that. Visit the lows ahead of the Fed rate decision, and after that you can start looking for it to find its bottom for longer term for more upside. Once when Fed gonna finish its first hike. Okay, similar on the Ethereum. All right, so similar on Ethereum, correction is just trying to appear over there. That correction to break down sharply and continue to keep dragging lower. BNB is also same. You go higher after hitting the floor. So the coin you are watching for longer term going to be Solana, all right? So I'm going to look at the Solana at the end of this meeting. But right now, these big coins. Okay, this to break down and test that previous low. So yield. Okay, so yield, I see that yield gonna find its top at 2 for a while, for some time. Okay, and the daily correction which I'm anticipating on the yield to come, still expecting that to come, all right? Price to yield to fall back within the daily moving averages. All right, there we can see, so it to fall back within the daily moving averages and hold the trend over there for the next, you know, next rise. So on a lower time frame, it went lower sharply. Okay, but the daily analysis is similar like the previous weekly market outlook. All right, go and test the previous low. So 2-year yield to just keep climbing. All right, so we may see it, you know, 2-year yield is also, you know, trying to find its top. I don't see that 2-year yield gonna run the way it has already went higher. I don't see that 2-year yield gonna keep running the way it is doing right now, something like that. Okay, but this possibility exists over there. I don't see that is going to happen. If that is going to happen, that is going to invert the other yields. All right, the yields curves which I have shown you at the start, they're gonna invert. And if they're gonna invert, then this is gonna be that's gonna be the first signal that the recession is going to hit in next, you know, 9 to 15 months. Okay, so this is 2-year. So okay, so this is the 2-year. That's what we are going to see, this story. Okay, so after, you know, but still high, it is still high. So this kind of story we are going to see like that. So New Zealand 2-year yield is still high at 232, running at 232, but we may see, you know, like that on 2-year yield. So it's too early to say that, okay, because the trend is really sharp on the 2-year yield and still can run for more upside. All right, so the higher it goes, it's going to be problematic for the Fed. The higher the 2-year yields or short-term yields, all right, the higher the short-term yields goes, okay, they're going to be a problem for the Fed. Let me check if I do have charts on, you know, lower than this 2-year. I haven't added monthly chart. So Nikkei. So indices still gonna stay under pressure. I'm not anticipating indices to keep rising, okay, because I have already, you know, guys, shown you what is the reason at the start. Okay, shown you yield curves, shown you Fed fund rates, shown you 2-year yield, all right, shown you inflation. All these charts are not making sense for the equities to stay strong. All right, so for that means you are not looking for buy the dip. You are not looking for them to continue for more upside. Since last couple of weeks, all right, 4 or 5 weeks, I was showing you dip on the indices. All right, I was showing you that indices to drop. So indices are still in that correction. Okay, in the previous weekly market, last 2 previous weekly market outlook, we were expecting, you know, one more push up to 70% tracement. All right, if you remember the previous bearish wave, the bullish wave, the current bullish wave, which this, all right. Okay, this to retrace up to 70%, this bullish wave, this bearish wave, and this bullish wave to go up to 70%. So we are still within that, you know, structure, the retracement of this previous bearish wave. All right, so that's still same, and specifically for next 4 to 5 weeks, we are expecting indices to stay under pressure, okay? Indices not to rise significantly or even not to test the previous top. So it's going to be really hard for the indices to test the previous top, okay? There are many, news which are floating out in the market, which are putting, pressure on the indices to continue the trend for more upside. Okay, so that's the structure, right? So we may see another leg higher next week like that. And again, they can drop aggressively to the downside. All right. So they can break down already. I mean, they can break down and can test that low. But this is the structure. Right now, for next couple of weeks, I don't see buy the dip opportunities on the indices. Okay, so if you are buying and looking for buying the dip, buying the bottoms, so trade with care. Okay, so same goes with the S&P 500. So I'm anticipating S&P 500 to break below the previous bottom. Okay, break this previous low, and slightly go below 4,000. Okay, and there is very good chance that S&P 500 gonna break this previous bottom this time. Ahead of the Fed March meeting, all right, and that's going to be a buy opportunity after that, once Fed gonna raise the interest rate. Okay, so if that comes, then this is going to be a really good buy the dip opportunity. Okay, so we're going to have 17 to 18% correction on the S&P 500, okay, for next leg to appear over there. So that's what you are expecting. That's what you are looking. All right, the bigger correction which is already underway, and we have seen already drop on it up to 12%. Okay, but that has recovered, and it is still below from the previous top. 4.5. Okay, 4.5. So if I'm gonna look at that 4-hour time frame, so price to retrace that 70%. Okay, of this previous bullish wave. Okay, this buy opportunity is still there. Okay, as shown in the previous weekly market outlook, that price need to retrace up to 70% of this move. Okay, so that 70% retracement is just happening right now. We can say that. All right, and the price is slightly below below the moving averages, so that's happening right now. So this is the area, or that's the place where you are paying attention for the next week. All right, so price to hold these areas. Okay, this red area, so hold that and continue for the next leg, test that top or another leg higher 70%, and then we may see again drop till Fed rate decision. So indices is going to stay under pressure. So if you are trading on them, then trade with care. All right, but that's the structure for next week. Right now I don't see more upside on S&P 500. Okay, I see another leg higher, okay, within these areas. Okay, bottom going to be within these areas as shown. So looking for that one more leg, and taking your trade out and looking for this to go for a bigger correction. So same goes with the Nasdaq 100 index. All right, same. Price is retracing 70% of this bullish move. All right, the move which we were anticipating last week. Okay, and that leg, there is possibility that the breakout can come from more downside. Not anticipating that. Okay, if it comes, then bigger correction. Okay, like S&P 500, and then continue. Fed to finish their first hike, and markets are pricing in for that first hike. Right, that's why we are having. So once Fed gonna deliver that, okay, so we're gonna see normal market then. Okay, so CAD Chief. So CAD Chief also gonna be a good chart for longer term to the downside. Okay, so that's gonna be the wave, and this time I'm anticipating that the price gonna break out this previous low. Okay, and we're gonna have price all the way up to 69. What causing CAD to stay strong? Simply is the oil. Okay, so you paying attention at these prices. If another leg come over there for upside, you're watching that top. Do not chase the prices at the current price for more downside, as it is not at a good spot to to chase that. Let the price test the top and then drop. Euro CAD also went lower. Last week we were expecting it to go down. We were not expecting it to continue its bullish trend. All right, but that's the structure. Longer term trend still bullish. Expecting it to go up to 20 October highs. All right, but lower time frame is still bearish. Okay, so we may see another leg lower like that. All right, not a best chart right now. Okay, not a best chart right now, Euro CAD. All right, because it can break out both ways. I have shown you, drop on the oil. All right, if that sharp drop comes, then Euro gonna get stronger against the CAD. Okay, we're gonna see breakup for more upside. If oil forms correction, goes for another leg higher, then Euro gonna keep dropping against the CAD back to the bottom. All right, so what I have shown you on the Euro dollar, bigger weekly drop. All right, daily drop up to 10. So that also gonna, keep some pressure on the Euro for more downside. So not at a best spot where you can look for buy for more upside. Okay, so still another leg lower possibility exists over there. So price can visit that previous low before going to continue to keep pushing more higher. Pound chief, all right, so pound chief to break down, and the target gonna be that 20 October lows as well. So what you are expecting, simply you are expecting price to stay below. So even if it is going to break out slightly, okay, so like that, still gonna be that trade. All right, so still gonna be that trade, the trade you are looking. So price to stay below that previous top. Euro pound, all right, so last week we were expecting ABC move on this chart, all right, and then it to continue. We are having that ABC move. All right, this ABC move is appearing over there. All right, so what you should do, you shouldn't chase the buys over there. Okay, even this pair is not tradable for any direction at the current price. If you're gonna start looking for buy, there is room for more downside. If you're gonna start, selling it for this one more drop, it can rise. Okay, so it's not at a best spot where you can start trading on this chart. Okay, so what I will suggest you to let the price keep falling all the way back to that previous bottom. Okay, and then again start looking for longer term reversal on this chart. All right, so what's happening right now? Okay, so right now Bank of England is raising the interest rate, and they are trying to contain the inflation. So ECB still to come. So when ECB gonna come, we're gonna have strength. So inflation is also higher in the Europe. So we're gonna have this kind of move, right? The move which I have already seen. So there is high chance that ECB gonna end their bond purchases program in July, all right? And Euro gonna start pricing in ahead of that, all right? So that's still far away. So pound Australian dollar, very much similar analysis like last week, all right? So same analysis, not a best pair right now. So this is the structure, okay? Another leg or breakdown and continue for more downside. Pound New Zealand dollar, similar analysis like last week, another leg or breakdown. Yeah, so they're still trending for more upside. New Zealand dollar is still weaker. So pound CAD is also similar like last week. These are not the best chart right now. All right, we still can see another leg higher or breakdown. Okay, Euro AUS. Last week we were expecting it to retrace up to 70% of the previous bullish wave. Okay, so we are having that bearish wave. Okay, we were expecting this to correct. So what you are expecting next week, you are expecting it to finish at least there. Okay, at least this previous low, 70% of this previous bullish wave, or in extreme scenario, this previous low, 88%. Okay, and then breakout again for more upside. Okay, so this chart is very much similar like the Australian dollar chart. Okay, if I'm gonna invert that, if I'm gonna pull out the Australian dollar chart, so both are similar. Okay, so analysis is also similar. Okay, so similar analysis, the analysis which I have made over there on Australian dollar against the dollar. Okay, or the analysis which I have made on the Aussie yen and Aussie dollar, or the logic which I have just shown you over there. Okay, why we are staying bullish, bearish, bullish on the yen, because dollar is pricing in, yen still needs to price in. Okay, similar way these pairs gonna go up, so euro gonna go up against the Australian dollar. All right, so you're looking that next leg. So longer term target gonna be the October lows, October highs. Okay, that October highs, that target still far away. Same goes with the Aussie chief. Aussie chief is also finding its top over there, setting up for another bearish leg. This time we're expecting this to break down that previous leg, previous bottom. All right, this the next leg to break down that previous leg. So is there possibility for another leg higher to appear over there? Yes. So if I'm going to make it more simple analysis, okay, then you are simply looking for this top to hold. All right, this resistance to hold. All right, so that's what you are looking. All right, so Euro New Zealand dollar is also similar like Euro Aus. Last week we were expecting it to retrace up to 70% or 4-hour moving averages. Okay, so it's retracing now, so hold these moving averages. Okay, and next leg break that top and go much higher, 20 October highs. Kiwi chief also similar like the New Zealand dollar, US dollar. Okay, or yen. Okay, that's what you are expecting, breakout this time. Same analysis like yen pairs. Okay, we still may see another leg back to that top. Same like Kiwi Yen. All right, don't think so I need to spend more time on it. Previous top. Kiwi CAD, same analysis like Kiwi dollar. Okay, so go more downside, expecting it to go more downside. Previously we were expecting it to rise last week. Okay, we were expecting it to hold the trend and continue to keep rising, go for a bullish leg there. Okay, it held that previous lows. Okay, went for another leg higher, but for next couple of weeks, or next week, all right, I'm not anticipating this to do something unusual. Okay, so what's going to be the unusual? If it is going to rise like that and an aggressive move, now I'm not anticipating that. So what I'm anticipating it to just simply push for another leg higher, all right, another leg higher, and then start dropping and continue to and break down. Not a best pair right now, to be honest. It's not a best pair where you can spend your time chasing the moves on lower time frame, all right. But the analysis is very much similar like the New Zealand dollar, US dollar. Okay, the extreme prices for the correction gonna be the 8-hour time frame. 8-hour time frame correction is already appearing over there. Okay, but there is possibility for another leg higher like that. Okay, before going to drop. So another short-term 4-hour time frame, trade can appear over there, like other pairs. Aussie CAD is also similar. Last week we were expecting it to hold the 4-hour time frame correction and continue to keep rising. Okay, so it's already on its way, but I'm not anticipating it to go beyond the daily moving averages. Possibility exists over there, guys, as all charts are pointing for another leg higher, deeper to 70% tracement has already happened. Okay, there you see, almost happened. Price almost tagged the retracement which I was talking about previously of this bearish wave. That has happened. Okay, now the chance is that the price still can break out for another leg higher like that. Okay, and test that 88%. That's gonna be a bigger daily wave to the downside after that. Okay, but right now you are expecting price to stay below that top, and if one more leg appears over there, okay, like that, like the previous one which we were anticipating last week, we were anticipating this leg to appear over there. Okay, if that appears over there, then you are looking price to break down for the daily move to the downside. All right, this to drop that wave. All right, hope that makes sense. So Aussie New Zealand dollar, to drop. All right, to drop that wave to happen. It's taking time, it's moving, but moving very, very slow. But this is what we are anticipating. Not a best pair right now to trade, to be honest. So Euro Chief to just keep dragging more downside. Not a Euro Chief is also not a best pair to trade right now. Okay, but trend is still bearish. It's struggling to push more higher, and you are looking this structure. Okay, breakdown or go higher and then breakdown. Not a best pair right now, guys, to be honest. Dollar peso, you are expecting it to hold, find its bottom, and longer term bullish run, specifically if Fed is going to raise the interest rate. Okay, so emerging market currencies simply gonna struggle. All right, so hold this previous floor and rise this previous low. Okay, so dollar Chinese yuan also need to rise for longer term, and we are having policy divergence between the People Bank of China and Fed. People Bank of China is cutting interest rate, stimulating the economy, all right, while Fed is looking to raise the interest rate. So both central banks are going to the opposite direction, which means that this is a longer term buy opportunity on the dollar against the Chinese yuan. Okay, a sharp aggressive breakout or test the previous bottom, and then again, so better to let the price test the previous floor rather than, even if sharp breakout is going to come, still going to be a buy opportunity. Okay, so sharp means really, really sharp. Okay, not small sharp breakouts. Okay, so if I'm going to look at the previous examples, then you are looking something like that kind of. So obviously that those kind of breakouts going to driven by some fundamental news. All right, like these kind of breakouts or like that. So if these kind of breakouts going to come, then you can expect for a buy. Okay, but yes, it is setting up for a sharp aggressive move like that because of policy divergence. Okay, so US30, then we're going to look at the gold. So US30 is also very much similar like the S&P 500. That's the bigger time frame, lower time frame, same. I don't think so I need to talk about that. Hopefully you see my structure and what should be the next trade. Okay, next trade going to be that, and expect that to follow these arrows. All right, so same goes with the German 30. All right, that's the structure. Another leg lower first on 4-hour time frame. Not another leg lower. Okay, first that 4-hour time frame. Okay, this 4-hour time frame. Once price going to complete that and then break the previous low. So on UK 100 index, also one more drop. Okay, like that, one more drop up to that trend line, before going to do anything else. So gold. All right, so gold to drop, gold to let's just make slightly a nice one formation. Okay, gold to follow that. As said, gold is not a bullish story, gold is not a buy. Okay, gold, some people they say that gold is inflationary assets. When we see inflation goes higher, gold is a simply inflation hedge. Okay, when gold goes higher, when inflation goes higher, you buy gold. All right, but right now what we are facing higher interest rate policy from the central bank. Okay, if I'm gonna pull out my 2-year chart, 2-year yield, US 2-year yield chart. Okay, this is simply spiking up very, very aggressively for upside. Okay, and if I'm gonna pull out again a Fed funds rate on it. Okay, so Fed fund rate is just simply sitting at the floor from the bottom. Okay, so if I'm gonna pull out inflation chart, if I'm gonna, let's just pull out there, these 4 windows. So I'm gonna pull out inflation. That's the inflation. So if I'm gonna go to the histogram, so there we can see. So gold, if I'm gonna go to the daily, a weekly chart, and I'm gonna look at this. Okay, when inflation hit the floor, okay, there, when inflation tagged that floor, all right, so gold was rising way before that, right? There, okay, when we had, you know, when inflation started to fall in 2018, okay, when inflation we are having inflation was falling, all right, so it started to rise, all right. It you know, some central banks, they already knew, many, you know, major banks, they already knew that we are going to see, you know, deflationary shock. Okay, we, you know, they were already aware that we are having, you know, recession. Okay, we are going to hit the recession, so they started to already, you know, buying the gold. Okay, they already started to buy the gold at 1200. Okay, so since then gold is rising, so they already knew that this is going to come, the inflationary shock we are going to see, the inflationary shock which we are having right now. Okay, this inflation is going to come, so gold strongly priced in for that move. Okay, gold priced in for that inflationary move, short that this wave. All right, right now we are going to see, I mean, you know, hike. Okay, the Fed is going to raise the interest rate as yields are pushing higher, so gold should go in a correction, weekly correction. Okay, like it has done in the previous cycle. Okay, there is the previous cycle. Okay, so Fed started to, there is the previous cycle. Okay, so if I'm gonna look at that date and I'm gonna look at this date, that's where it found its top, right? And that's where in 2013, okay, so Fed started to normalize their policy into 2013. Okay, 2013 and 14, they started to say that they're gonna, you know, normalize. They're gonna end their QE program. They're gonna start raising interest rate. All right, so yield started to rise. 2-year yield started to rise, and after that, Fed fund rate started to rise too. Okay, there, this Fed fund rates, and gold went into a bigger weekly correction. Okay, so should we expect gold to continue to keep pushing more higher, break out for more upside while these charts are changing, fundamental policies changing? All right, inflation gonna start dropping. Should gold continue its bullish trend for more upside? No, it's not making sense right now. You know, in one case you can expect gold to break out and continue to keep pushing more rise if stagflation is going to hit, if inflation is not going to control, if Fed fail to control that inflation, all right, and inflation keeps pushing more higher aggressively, then you can expect that gold gonna continue to keep pushing more higher. Stagflation is going to hit, and then, you know, gold not gonna stop, gonna break the previous 2100 top and gonna continue to keep pushing more higher. All right, so that's not the scenario. All right, so buying gold right now for short term, it's okay. All right, but for longer term, it's not making sense. All right, so once we're gonna have, you know, sharp drop in inflation, which is going to happen definitely. All right, in next couple of months, we're gonna see sharp drop in the inflation. You're gonna see sharp sell off on the gold too. All right, so gold gonna hit that you know, one more leg lower too. So that's the bigger picture, okay, which is gonna stay there for a while. So if I'm gonna look at the lower time frame, okay, what to look for on lower time frame on the gold. Okay, so gold to go, yes, definitely once you know, Fed gonna finish their hiking cycle, and we're gonna have a bigger correction, something like that. There gonna be another, you know, bull cycle on gold for longer term like that. Okay, like this. So right now it's in gold is in that correction. Okay, or a similar cycle, we can say that. All right, is there a possibility that the gold can go that much far away? I don't think so. I don't think so that gold gonna go $1,000 anytime soon. If it is going to go up to $1,000 anytime soon, this is going to be a longer, super longer term, buying opportunity on the gold. Okay, I don't see that is going to happen. I don't see gold gonna go that much far away. All right, but what I see another leg lower, bearish leg lower. Once we can have higher rates, okay, that one more leg lower, similar leg, okay, like let's just look at this, copy paste that stuff. Okay, like that. Okay, still this leg is way going up to 1300. I'm not anticipating this to go that much far away. All right, I'm anticipating this to fall up to, let's say 50%. Okay, 50% of that move we can see. All right, this kind of. So how that bigger weekly structure is going to appear over there, we'll see. All right, but longer term, that's going to be a bullish story for more upside. Okay, once this weekly correction gonna finish, that's a bigger picture. Okay, with the fundamentals, what fundamentals are doing, and what rates are doing. All right, what inflation is doing. By looking at that, what you should expect gold to, slightly can push higher. Even that top, even 1900 is far away for me. All right, I don't think so that it's gonna tag that 1900. All right, but even if it is going to tag that 1900, all right, so you're looking this to visit this previous low again, or as shown on the bigger picture, bigger weekly chart, 50% tracement of this move. So all these areas are good to watch for the gold to hold the previous top. Okay, all these areas. So 1900 is still far away. Price is running at 1860. Okay, so your first resistance, we can say that is this. You're watching that resistance. If it hold that, then it to drop from that top. Okay, if it breaks slightly, push more higher than 1960 or the previous top. Okay, but that's what I'm anticipating. Okay, another leg lower, and and this is in line with the fundamentals. Okay, so or similar. Yeah, if we're gonna have a sharp drop in inflation in next 1 to 2 months, inflation is going to drop significantly after a couple of hikes. Okay, then we may see that kind of crash on gold. That kind of crash. That can happen. Right now, rates are close to zero. That's the reason we are not having that crash. Okay, but that crash can happen once we're gonna have a couple of hikes from the Fed, 1 or 2 hikes. So same goes with the silver, right? Same goes with the silver. Silver is not a best chart right now, but that's what I'm anticipating. So I'm gonna ignore that. So copper is already dropping from the previous top. Okay, we were expecting it to drop previous top. So longer term is same analysis like gold, guys. Okay, I don't think so I need to talk about this. What Fed is trying to do, Fed right now is trying to slow down the growth. Okay, simply by raising the interest rate, they are trying to slow down and trying to bring the inflation down. Okay, like they have done there. If I'm gonna pull out same charts, the chart which I shown you on the gold, so it seemed like that. Okay, this is the cycle Fed is trying to do. They are trying to the Fed is trying to reverse that trend. Okay, which they have done previously in 2013. Yeah, these metals started to price in 2013. All right, for the Fed hikes. Okay, so you shouldn't expect that trend to continue. Well, fundamentals are changing. You should expect it to crash. This is the longer term trend. You are looking like this previous one. So same analysis like gold. Okay, and it's dropping already sharply lower from the top. All right, in case if it has that top, you are looking, first of all, short term trades back within these areas, or in best case scenario, longer term run down. After a couple of hikes, when Fed gonna raise a couple of times, these metals gonna get hit hard. They're gonna get hit really hard. All right, so I think we have seen those small caps. Okay, small caps left. Small caps analysis is also similar like the S&P 500. All right, so same. I don't think so I need to talk about that on lower time frame because time is running out. So same goes with the US Russell 2000 is struggling more. Okay, we may see more downside on US Russell 2000 ahead of February this year. Okay, so same goes with the Russell 2003. Okay, Euro stock is also similar. I don't think so I need to talk about that a lot. Okay, so lower time frame analysis is also similar. We are expecting that breakout after having one more leg, bullish leg. CAC 40 is also similar. All right, I haven't drawn anything on it, but the structure is very much similar like that. All right, so stock 600 is also similar on 4-hour time frame. I don't think so I need to talk about that a lot. Okay, but structure, pattern formation, everything is similar like that, like the other S&P 500. Okay, there. So same like other indices. Okay, that. So if I'm gonna look at the Solana is a good chart, but I see Solana is going much lower before going to run for another leg higher. Okay, so this is the chart. Okay, this is similar like Ethereum. Solana is similar like Ethereum. Okay, and it has a huge potential to run for more upside. I see Solana to drag for more leg lower. All right, so it's breaking down. I see it to just keep dragging lower. The more the price goes lower, going to be best for you for longer term, specifically longer term holder. Okay, longer term holders, I see potential on this chart rather than the Ethereum. All right, this can run more. So first of all, finish that leg, all right, and then run indefinitely for more upside. All right, so let this do not buy at current prices. All right, so $92 is super expensive price. Okay, and as long as Bitcoin's gonna stay under pressure, Ethereum gonna stay under pressure, we're gonna have another leg lower on those Bitcoins. This is not going to break out for more upside. Okay, very less likely it's gonna break out. So we're gonna have another leg lower. We're gonna test that. So the best price, okay, for accumulating, okay, 20 or 30. Is it possible for this to break down up to that? Yes, it can. Okay, it is, under pressure. It's extremely under pressure. So breakout can come, no surprise. So this is the coin which you are looking. So same analysis like last week on Stack. All right, so ADA, same analysis on ADA like last week, another leg lower. All right, so Terra, same analysis like last week. I'm expecting it to break down more downside. Okay, so Sand, breakdown for one more leg. Breakup is possible, okay, but right now conditions are not favorable into that direction, all right, because of the higher interest rates. So go down. GTC is also sitting at the bottom. Okay, so go down, be more cheap. Right, so still expensive. 7 is still more expensive. Break this previous low, then you can expect it to rise for longer term. All right, KuCoin, same like last week analysis. All right, nothing new. Dogecoin, go more downside. All right, test this previous low, and even Elon Musk is struggling to pump the prices these times, right? Because fundamentals are changing. All right, so policy is changing. Central banks are changing the policy. The run you have seen previously because of the ultra loose monetary policy. All right, so all these coins are sitting at the floor. So go more downside. All these coins to drop back to the previous bottoms. Okay, guys. So OITA to drop. Okay, OITA, same analysis like last week. Go more downside. Okay, then go higher. All right, so DOT, also same analysis like last week. They haven't moved a lot since last week. Okay, they are still there. Same on Litecoin, back at the previous bottom. Ripple's moved slightly, all right, but still expecting Ripple to get down, test that previous floor. Shiba, do not see anything on it, all right. You are not going to see run. So previously we were expecting it to drop back to that previous low. It dropped. Okay, so one more leg. It's not ready yet. These coins definitely gonna struggle for longer term. They're not gonna rise sharply anytime soon, specifically during the Fed hiking cycle. All right, so G chain to break down to Yeah, Cortex to break down too. All right, guys. So let's just finish here. Enough for today. Hopefully, you have learned something new today, okay, and got the idea that what are the pairs you are looking to chase for the next week. All right. So thank you very much. So thank you very much for coming into the weekly market outlook, and have a nice weekend, great weekend, enjoy yourself. All right, so we'll see you back again in another weekly market outlook next week, or maybe during the week in short videos. Until then, bye, and thank you.